Welcome to Trader TV Equities, your insight into the trading climate for professional stock investors. I'm Dan Barnes. In April's show, we're going to be asking how effectively equity execution can be measured and the extent to which end investors can use this information. I'll be joined by Teresa Woodard, Head of Trading Analytics for Rowe Price, to discuss the way execution is currently quantified, and from Thomson Reuters by Ian Mawdsley, Head of ETI Trading EMEA, and Tom Kennedy, Global Head of Analytic Services, to look at the options for improving the reports used internally and those seen by asset owners. Teresa, welcome to Trader TV.
Thanks, Dan. Thanks for having me.
You're welcome. To start with, I'd like to understand the extent to which transaction costs actually reflect best execution.
Well, it's pretty interesting. Here at Rowe Price, we believe that best execution is a process. And transaction cost analysis, or TCA, is simply one of the factors to evaluate how effective we are at executing that process. If we do it well and with care, we should be able to measure each part of the trading life cycle to measure how effective we were at doing what we intended to do in the market.
So which metrics might be included in both TCA and best execution analysis?
Well, one of the things that I think is important when we're evaluating TCA or our trading patterns is what our intent was. So some of the metrics that we use are how close were we to the investment manager's decision point or arrival price? Or did I have undue impact in the market? So did the stock or reversion, did the stock revert back after I completed my execution? We also look at TCA as a way to measure our counterparty performance. So we may be looking at a VWAP or average price over the course of the order life cycle.
And so it sounds like you do a lot of this in-house. What are the pros and cons of using an in-house measure versus an external measure? And do you use both or just one?
Here at Rowe, we have a comprehensive TCA effort, and so we use both third-party analysis along with our in-house trading analytics team. One of the benefits of having someone doing this work in-house is that you can really provide trading insights directly to the traders on a real-time basis. And so being embedded with trading and trading management, we can really understand the nuances of how trading exists here at Rowe. But I think it's very important, and I'm sure our clients think it's particularly important, that we also have a third-party analysis, an independent analysis of how we're executing, how we compare to our peers, and if we're investing as effectively as we can. Sure.
And so you mentioned the clients there. Obviously, the trading desk wants to understand the metrics around trading. Clients can also see performance. Who uses these measures then within the firm and externally?
Sure. I mean, one of the best things about, or most interesting aspects of TCA now is everyone wants to see a piece of it. And so both internally and externally, we may be providing trading data to traders, trading management. Some of our fund boards may need to see transaction cost analysis as a part of their governance effort. Obviously, our traders internally, and again, as we're evaluating our counterparty's performance, our portfolio managers are interested to know how they are impacting how we execute in the market. And of course, our Rowe Price investors. We have a best execution mandate, and as I mentioned earlier, TCA is just a factor in how we're executing on behalf of our investors.
And so do the analytics that you represent to different groups have to have different characteristics reflecting their use?
Yeah, it's actually one of the most challenging parts of TCA is how do you present this very nuanced data to different stakeholders? And of course, everyone has a different horizon when they're looking at transaction costs. So as I mentioned, if our fund boards are looking at our trading costs, they may be looking at it from a governance perspective, again, or trying to see how we're impacting overall performance. Of course, our clients may be trying to compare our trading with maybe another asset manager. And of course, there are challenges, again, in how you present that data. And we want to make sure that we present it in a way that's clear and actually informative to the stakeholder.
And is there a danger, perhaps, that somebody might look at one TCA metric and then perhaps misunderstand what's happening in the execution process?
I think that is, you hit on a very interesting point. And one of the things that we're seeing in the marketplace today is folks become much more interested in TCA is when you hear transaction cost, or really when you hear cost, folks automatically think that we may need to reduce those costs. And so one of the things that I always point out is that you can always have a lower transaction cost if you're buying things that are going down. And I don't think that's what our investors want us to do. They want to make sure that we're making good investments in the market. So it's important to me to present that data in a way that is both informative and not misleading, and at the right cadence for the different stakeholders.
Presumably there are different types of data that you have to bring together, and technically that could potentially be quite challenging to integrate. Is it?
It is quite a bit. One of the things that we've taken a lot of care with is on the data side and making sure that we're capturing all of the relevant information throughout the order life cycle, from the moment that the portfolio manager is placing the order all the way out into we begin to send our executions out into the market. One of the biggest challenges that we've seen over the number of years is just the amount of data that we're capturing. But also at the same time, there becomes a part of it. There's a piece of data when we're sending, not a piece of data, but a part of the life cycle when we've sent an order to a counterparty, and trying to evaluate what that broker may be doing on our behalf. That's a challenge there, because there's a whole other set of data that we may not have access to.
Okay. Is there a way to resolve that challenge?
Well, there's been a number of different efforts in the industry over the past few years to start to begin to capture that data. One of the things that we hope for at Rowe Price is that there'll be a normalization of that. I think that's prime for a third party to come in to start evaluating some of that data from the different counterparties.
So TCA informs the trading desk, it informs the portfolio managers, it informs the end investors as well. Are there then any best practices you think that could be shared in the industry when communicating between the trading desk and the investment process to make sure this information is drawn into the holistic process?
Sure. I mean, I've been in this space for quite a while, and I remember a few years ago, some of us in the industry got together just to have some common language on how we talk about best execution and how we talk about trading costs. I think one of the most important things, if we're talking about communication between the portfolio manager and the trader, is intent. What is the intent of that investment? And then we as an asset manager should be able to communicate that to our end investor as well when we're looking at TCA. One of the things that we try and caveat is that comparing transaction cost results from one asset manager to another is very difficult, because you're not looking at an apples to apples comparison. Unless those portfolio managers are transacting in the same stock on the same day in the same size, it's very difficult to compare. So myself as an analyst, I need to be prepared to share with our end investors, this is the intent of the portfolio manager, this is his trading style, and these are the subsequent costs.
I understand. So you have qualitative as well as quantitative information to share.
Exactly. I mean, one of the things that I always say is TCA is a story, and it's a part of the best execution process. So it's how you share that story and make sure that you're giving informative information to our stakeholders.
That's great. Teresa, thank you very much.
Thanks, Dan. I appreciate it.
Next, I'm joined by Ian Mawdsley and Tom Kennedy of Thomson Reuters to look at the models for improving execution and transaction reporting. Ian, Tom, welcome to Trader TV.
Thanks for inviting us.
Great to be here.
What sort of analysis do you think end investors want to see from their asset managers?
So I think end investors are looking for cross-asset transactional reports. Mm-hmm. These reports in the equities markets have been centered around looking at slippages, broker analysis. MiFID II is really kind of up the ante. There's not one factor, there's about 6 factors that firms have to look at: price, cost, speed, likelihood of execution. So looking at multiple metrics and different characteristics is very important. Okay.
And what sources of data might buy-side trading desk be using to assess TCA, transaction cost analysis?
So you obviously the ingredients that you need to be able to do TCA. So you need market data, and that's coming from regulated markets, MTFs, OTFs, and APAs now for some of the off-venue trading.
And what's APA?
So an APA is an approved publication arrangement. So it's mandated now with MiFID II that all trading is reported, post-trade reported, and there are obligations to do pre-trade reporting also across certain assets if they're deemed to be liquid.
Okay, and that's very interesting. We talked there about MiFID II. If we take the conversation a bit more globally, so looking at the US markets and Asia Pacific markets, presumably then the quality of data, the amount of data one can get is quite varied.
Yeah, I think, we look at, from a US perspective, Dodd-Frank, it mandated best execution requirements for quite a number of years. But what we're beginning to see is regulators in Asia now implement or start to go to the market and consult on its own best execution initiatives. The Monetary Authority of Singapore have issued a consultation paper around this very matter, and also the SFC in Hong Kong have issued a thematic review. And some of those regulations have mirrored what is happening in Europe. So we're seeing this supranational kind of response to best execution, especially investor protection.
Okay. And how does the trading desk interact with that data? How does it bring it together and how does it use it?
Well, I think there's a couple of ways, obviously. So outside of standard reporting, as Tom was alluding to there, so things like best execution policy and also investor reporting. I think there's also an element where the trading desk itself is looking to measure its own performance.
Yep.
Particularly around perhaps trader compensation. If you're trying to work out how valuable is your trading desk, as opposed to outsourcing to a high-touch desk, maybe at a broker.
Yeah.
I think it's essential to be able to see what sort of alpha they're adding to the orders, if you like. And in terms of then the traders themselves using that data, they want to be able to interact with the baskets of orders they're receiving from the various portfolio managers. And they'll be able to see if there's outliers there. Do certain orders need extra attention, or certain orders need to be a bit more aggressive in terms of getting these things filled? So there's certainly a couple of ways there that they're interacting on a real-time basis. I think one of the newer parts that we're seeing at the moment is around sort of more pre-trade analysis, if you like, market impacts.
Okay.
So where I've got a large order to do, I've got much more complexity in terms of market structure these days. It's not just a question of I've got a large Vodafone order to do, I'm going to come to the LSE. There are something like 19 points of liquidity, and that's not including all of the banks that offer in terms of SIs as well. So
that system is internalised.
Exactly, yeah. So that's added a lot of complexity to the trading world. I think really the only way to be able to look at how you can best execute an order now is to be able to do some kind of pre-trade analysis and let the system come back and make some kind of suggestion on how you should be trading.
Okay, that's really interesting. Thank you very much. What are the technical challenges then in pulling this data together?
There's a lot of data to be modelled, so the information modelling challenge is really complex.
Yes.
So there's a lot of pressure on in-house IT to aggregate data. So the lack of a consolidated tape provider in places like Europe has made it very difficult to do best execution. So you have to go out and you have to source this data that has to be integrated into internal systems, being able to capture timestamps all the way across the trade lifecycle from portfolio management decision all the way through to execution on an exchange or marketplace.
So you can understand the entire life cycle of when an order was conceived to when it was actually executed.
Absolutely, yeah. And then there's the transaction data that needs to be then persisted, and you need to connect to your brokers, our venues, and persist that.
Yeah, we're certainly seeing a lot more scrutiny in terms of the messages that are going backwards and forwards to the market as well.
Yeah.
So I think MiFID I introduced the idea of looking at the venue, if you like, so TAG 30 as it's called within FIX. But we've got a lot more granular since then, and people are genuinely interested now in terms of understanding, why did I go to a particular venue? Was it because there was a rebate paid to the broker, for instance? Am I operating in the dark pool more than I should be? Am I interacting with a firm's SI again more than I want to be? So I think that level of granularity has definitely improved, and the buy side has got a little bit more valuable data to be able to play around with in terms of having that deeper analysis.
And just to add, I think when you look at it from a customer service perspective, spreads are getting tighter. There's a challenge on getting that best execution. I think firms want to be able to give their clients, whether it's the sell side to the buy side or the buy side to investors, better insights and have more transparency.
Is TCA just used on the trading desk? Could you explain where Thomson Reuters sees TCA being used within the buy side?
So I think when we look at the metrics that TCA provides, I think those metrics they can start to actually be used further up the decision-making chain. So I think quantitative portfolio managers will take an active interest in understanding when they're constructing their portfolio, or either when they're rebalancing that portfolio.
Yeah.
When they trade into a position, what is the likely outcome? The FCA have written thematic reviews around best execution, highlighting the basis points improvements and how much money the industry could save if people took an active interest in optimizing that execution. So I think those metrics will be factored in. It's not primarily a quantitative portfolio manager's job to do this, and it still is a trading function.
Yes.
But I do believe that they will begin to take more of an active interest.
Okay, that's great, gentlemen. Thank you very much.
Thank you.
Thank you. Dan.
I'd like to thank our guests, Teresa Woodard of Rowe Price, Ian Mawdsley and Tom Kennedy of Thomson Reuters, and of course you for watching. To see our insights into trading fixed income and crypto this month, or to subscribe, visit tradertv.net.